Ladies and gentlemen, welcome back to Macro Mondays. You guys see the thumbnail. Is it all over? Are we going to the moon? I tend to be a perma bull, while this man to my left over here tends to be a perma bear. Dom, I'm currently looking at the price of Bitcoin. First off, welcome everybody to the stream. Make sure to hit that thumbs up. $1.19 trillion market cap. Bitcoin at 28,480. ETH hovering around $1,900. Dom, a lot of people are feeling bullish. Let me ask you, I start every show off like this. How are you feeling? Are we feeling bullish, bearish? What's the consensus over there in England?
I still think I still see. I expected a little squeeze higher, to be honest. I expected us to get to like 29.5, and I thought, actually, we are a little bit higher than I thought than we were at 28,443. I mean, I could still see it, and I still was of the idea that we see a squeeze up to 29.5 because there's decent liquidity there, which is untapped at the moment. But the stock market isn't quite going that direction. So, yeah. I mean, it's not to say they're not always completely correlated. It's harder for Bitcoin to move up if stocks are moving down. But we just had basically the Fed come out, New York Fed, come out with their inflation expectations. So they asked the public to fill out forms. It's not accurate really, but inflation is a monetary phenomenon.
Yes.
Which is basically an absolute joke where they pretend it's not related to supply and demand of printing money. But if people think that prices are going up, then they will buy more things because they expect if they don't buy it now, it will go up in the future. So the more people think inflation is a problem, the bigger problem it comes. It's a bit of a self-fulfilling prophecy.
Yeah.
And inflation expectations just came out from the New York Fed, which were sitting at 4.2% last month for forward inflation expectations. And the public's dialed it up a lot, and it's now expected at 4.7. So it's quite the jump in expectations. And a lot of it has to do with price of gasoline. So price of gas has gone up by last time I looked, it was up about 37% in the last 30 days. So it's a big old jump, and the market's rolled back over after that data. So we did hit 40. We got down to 4070 on the S&P. Then we bounced up to 4090, and now we're back down and falling pretty hard based on that. Because the problem is, Jerome Powell, like the absolute twat he is, always loves to take a victory lap. He loves to talk up the market.
He loves it.
And so he has been saying this phrase over and over again. Inflation expectations remain well anchored. That's the word he's been saying every meeting. He says it. He says that we think we have a ways to go, but they think it's a positive that inflation expectations remain well anchored. And he's been saying it every meeting because they have remained well anchored, but the anchor just fell off. And so the market is paying attention. And it's worth noting, I'll see if I can pull this up because I shared it in a trading group that I'm part of.
What trading group? How do I get into this trading group? Get your boy a link here.
It's the Trading Founders Lounge. So it's run by my market makers, GaltBet, and so it's devs basically. Both.
I like that. And Don, real quick before we continue, let's welcome everybody because there's a lot of people that are here in the stream, guys. And I want to let everybody know on today, this beautiful, beautiful Monday, guys, and welcome everybody from the DJs, Rodney channels. Thank you guys for joining us. We will be doing a $200 giveaway as well. So guys, make sure to go follow the instructions. Just following Dominic, myself, and VEMP Studios. We'll be doing this in about 20 minutes, and it's pinned to the top of my profile. So go retweet it, do the instructions, and we're going to have a good giveaway here. Sorry, just wanted to throw that in there at the beginning, guys. But welcome to the stream. We're happy to have all of you guys here. And make sure to ask your questions for Dom on the side. He will continue to look at it, and I'll pull up some of the best questions here for Dom. But Dom, back to you.
Yeah, let me pull this up. I even just named it Jake. I'm going to have to move it Back hell.
Here, look at Alkaline says, Dom, your chart last Monday was on point. Guys, his charts do tend to be on point pretty much every time, which is why I love this show. And the fact that he's saying that we might continue up to a 29.5 is actually pretty bullish news.
What was my I can't remember last. I'll tell you what, I can't remember. I mean, we did squeeze a little bit higher, but
it's funny. We have a lot of people in here. We have a lot of people in here that are still very, very, very bullish. I think it's normal to be bullish though. Like look, of course the market is telling us other things, but as an investor, of course you want to be bullish, right? I'm sure, Dom, you want to be bullish, but you're seeing things right now that you're like, it's hard to make you very, very bullish.
I'd love to be bullish. But yeah, unfortunately, it's just unrealistic. Like I'm seeing a lot of like.
Drop that link, baby. Our link says that link.
I can't, unfortunately. But so essentially, zoom in here. So this was. I'll give some credit to the person whose chart it is. Somebody called like Master Wu on like Twitter, like Panda. Panda Master Wu, something like that. But basically, you have these gaps as well in crypto. They're called CME gaps, and it's basically where the market is shut, and over a weekend or overnight, when it reopens, it either gaps down or it gaps up.
Yeah. And
so, for some weird reason, but the market is weird, these gaps tend to fill fairly frequently. And they end up acting like pivots. And you can see from this chart, every single time that the market has retested that original gap, it has dropped by over 100 points when it gets into that section. So for some reason, every time the market has hit 4067, it has never just, gone down a little bit. It's gapped over 100 points. So every candle that you can see, like this big red candle here, this big red candle here, big red candle here, big red candle here. For some reason, this area is like, get the hell out. Like it just doesn't want to go in that area. And if I share the actual, see if I got my CMC up. Yeah, here we go. Of course I've got it up. Don't go anywhere else.
Shout out to May you be well said, Jake, just bullish on life. Going to be good even when it all crashes, and we're going to be even better when this does pump. What's up, Crypto Jessica? Good to see you in here.
Here we are, classic. But yeah, so like I said, 4067 is the level that just it seems to hit there and just think, oh no, I don't like this.
Yeah,
and you can see we're at like 4078, and we got here earlier like 4071. So like, honestly, it's. This like we tested it here like the other day, and yeah, 1 like 2, so bounce back down. So funnily enough, this area 2 is like converging on a couple of the lines I've drawn. If we go back, so this line here is the like top of this like CME gap.
Yeah.
So you can see there's like really good support here, and it just runs straight through all of this and tends to work as like this pivot point. So it's being supported by that. And so when that actually gets taken out, that's when we have like pretty sore, big old drops. And so we've also got the convergence of the old trend line, which is that every time we hit this, we had dropped, and it worked really well. Like this was a spike on like a Fed day. Yeah. It worked well for so long, and then we had this fake out. And this is a part where everyone said, oh, like it's a new bull market, we're out. But the thing is, if you look back to like, I swear, let's see if I can actually pull this up. There we go, old like stuff here. But see if we can find, maybe if I go onto a weekly, but there's the exact same like pattern happened back in 2008. See if I can draw this out. I'm not sure. Oh yeah, here it is. So let me get the draw tools. Let me draw this trend line.
Guys, make sure too, if you are enjoying the show, hit that thumbs up, spread this around. It brings more people into the stream. What's up, Cool Beach Crypto? Blue Sky, my guy,
Oh, yeah.
focused on us here as well.
This was the fake out. So see if we can make this a bit clearer. But yeah, again, we had like this retest.
Yeah.
And you can see that it worked. And so it hit it here once back down, and then it popped out, and everyone thought, oh, thank God for that. Because even though it doesn't look that much on the chart that you see here, in reality, if you look at the actual like price from here down to here, so that's almost a 20% drop. So we would have officially entered a bear market here. And so when it bounced up here, everyone probably thought, oh no, it's going to hit that line again. It didn't. It broke out. It faked out. And then it came right back into trend, hit it again. Lehman collapses here, I believe. And then, yeah, it didn't work. And funnily enough, if you go back as well to the dot-com bubble, you can see the exact same thing happened. Like literally market. This is why I say to anyone, like, if you want to learn the market, literally just learn history. Because history always repeats itself.
Always.
Here we go. Everyone thought here we were back to bull market. This little fake out here. And then, yeah, it traced back like a heavy amount of the declines again. So it's happened like on both of these occasions. And then you've got COVID's here. And we had the exact same thing that we got here that you can see, where the old trend line, see if we can remove these to make it a little bit more clear for people. But yeah, you can see that we have done the exact same thing. And we're in this breakout stage where everyone thought, brilliant, it's like, you know, bull market's back on. And so we retested it here. Everyone's feeling pretty sure of themselves now. But in reality, if we, like I said, if we hit the 4067 level, we'll probably go straight back down to the 3960, and more than likely, I see us dropping back down to this level, at least on the bottom of the Fibonacci, which is like retesting the lows. I will start buying stuff around here in stock, so like around 3.5, like 3 point. I'll probably start like having a dabble around 3.8. And then I'll start going heavier as soon as we drop to like the same lows or just before. But yeah, it's I just don't see how we can't drop back down. Like we've never, usually whenever we have like these inflationary shocks, we are always heading into a recession. And the problem at the moment is the strength of like the consumer, which is what the Fed keeps saying, like the labor market is strong. Unemployment rate is at historical lows. We're at like 3.5% unemployment in the US. Like that's literally mental. Like 3.4 is, if I look at like the unemployment rate in the US, show you on the chart. The problem is as well, obviously, they keep changing the way that they measure this stuff. But yeah, if you look, here we are. Too many bloody charts, this. Here we are. If you look like, you know, we are so like low historically. And this chart doesn't go back too long, to be honest. It should go back a lot more. But yeah, we're at very, very historic lows.
And what are you showing right here? This is the unemployment rate?
This is the unemployment rate in the US, yeah. Ooh, crikey,
what was that? 2000 and, I mean, right after the pandemic, it was up to what? 15%. Oh my goodness. 15% unemployment rate. Now we're back down to 3.5.
Yeah.
So
and
what does this mean for us, like for investors, that there's less people that are employed? You would think that'd be good, right? Because there's more people making money.
Well, this is the thing, like the labor market is tight, but the problem is that because we're in the age of bullshit, where we are losing like money. Like everybody who is working right now in a salaried job, even people self-employed, like we are losing money because we are fighting inflation, and our real wages are going down. So we are adding jobs right now, but a lot of the job additions are in like the service sector, restaurants, like hotels, basically menial labor. And that's because people aren't getting new jobs. People are getting extra jobs because they can't afford to live. And it's like distorting the figures. So in reality, all these extra jobs are just desperate people having to take extra jobs on. It's not new jobs. And because the Fed has done such a terrible job, and society in general has given us this age of just, the bubble period, print money, stocks only go up. That's meant that all of the boomers, baby boomers, they've all retired. And they retired early because for the past 10 years, the Fed, the ECB, all of the central banks have been pumping asset prices. And that is how, that's like, it's not even like a conspiracy almost. It's not a conspiracy that the Fed prints money and asset prices increase. It's why they do it. The Fed purposely inflates assets because then people get more money and people spend more money. But the problem is that corporations don't actually pass that back down to people. So all it is rich getting richer and rich spending more on themselves and not on their workers. Yeah. And so all of the capitalists who actually own the businesses have all retired. Why would they work if they've just had their bags pumped for 10 years straight? They would have invested in stocks 10 years ago. And if you look at bloody more charts here, but if you look at a 10-year chart just of the S&P, honestly, where are we? Going back here. So yeah, let's look at 10-year. So if you are a person born in the 70s or born in the 80s, you are in your 40s or 50s. And you have experienced in the past decade, since the financial crisis, the whole economy should have collapsed then. And they've been artificially propping it up since then, and it's dying. It's over. They just keep it going because they can't possibly. They don't want to lose the current system because it's so good for the elites. It's literally like milking people dry, and they are the ones who are getting everything. So if you go look at the price increase, they expect people to still work when they've just had all of their wealth has increased by 178%, in 10 years. Bear in mind that that's just the S&P index, and that doesn't take into account one of the key parts of investing, which is compound interest. In reality, that 178%, if you compound that monthly, you've got people sitting on thousands of percent increase in wealth. If they had 100K in their pension 10 years ago, and that's been compounding every month, they add extra in, which is exactly how pensions work. The compound interest of, literally I could Google even, compound interest, 100,000 monthly increase 10 years. So that comes up with compound interest calculator. Let's do it the old-fashioned way. So initial deposit. So let's say that I had 100,000.
Yep.
And bear in mind, for a pension, you pay into that every month. It shouldn't, that's not a crazy amount. If you're 40, you've been saving into that every month. You've got 100,000. And how much are you going to be putting into there? So let's say I earn 100,000 again, and I put in 2%. Every year. So that'd be 2,000, divide that by 12. Let's say I'm putting in $200. This is my pension. So contribution is monthly. The investment time span is 10 years. Let's compound that at, what should we say, 5% even? So just from the cash, right? just paying in that cash, like the pot has grown by what's that? So 102 to 124, right? So now bear in mind that 170% is the actual rate over 10 years. So that's 17%. And that takes into account like all the drops like as well. So let's say that this is now 17% per year. That person who just he was 40, 50 years old, earned 100,000, which isn't a lot in the West, and in like the US, like 100,000, as far as I'm aware, really isn't like much.
It doesn't do much in like major cities. It does very little. It does very little. It's just a fact. It does very little.
So that Mr. Joe Bloggs, just by being alive over the past 10 years, has grown his retirement pot on compound interest monthly, doing $200 a month, from 100,000 to a total of 600,000, just by experiencing the market and being in. If he just tracked the index, didn't even outperform it, just by existing, his pension, if he had 100 grand in it and he's been tracking the S&P 500, that person has earned 500% growth.
Wow.
And so people wonder why we have a shortage of labor. It's because everyone is just retiring. They've got so much money. And that's why all of us, all of the young people, are fucking poor, because we don't have that. They've inflated everyone's assets, but the only people that had assets were the older generation. So we're all left behind. And this doesn't just go for stocks. They've also inflated our property prices by giving out tons and tons of mortgages. So now we're left in the situation where every price has been inflated so much that we can't afford anything. There's a shortage of labor because all the boomers are retiring on their masses of money the Fed has pumped for them. And we're left holding the bag. And this is why we just cannot, the stock market cannot have bottomed yet. Because where does the money continue to go into the market? Bear in mind that these people have been paying into their pension over and over again, every single month, every single year. And now they're no longer putting into the market. They are selling because they are now retired and they are living. So they are selling down those masses of assets the Fed has pumped for them. And we're not putting in hundreds of a month. We're not going to replace that because we're all poor. We all literally working like paycheck to paycheck, like not paying into a pension. Like it's the least contributions like in pension history from people our age. Because why would we? Why does anyone that you know think that like the global economy is going to last for another 30 years? How about another decade? So
no. And I even saw B Roots made a tweet about it too, and he was like talking about some token, right? And they were like, they're locking their tokens up for 10 years. He's like, 10 years? He's like, I don't even think crypto is going to be here in 10 years. And I was like, shit.
Oh, it's true, but this ever since like 2008, this pessimism just hangs over everything. And this is why I'm a big believer and a big advocate for gold. And I recommended to you in September, to buy gold. Yes. And I think it's done better than Bitcoin in that time.
It has. And honestly, that was a wake up call when I went to visit you in London. And you're like, look, this was before FTX. This was before the SEC started charging everybody. Like, look, there's going to be an attack on crypto. There's going to be some huge catastrophic events. You said the best thing you could do is buy gold and silver. And I think actually last week you pulled up the chart and gold has outperformed pretty much every other asset, right? Like gold has been the only thing that's risen since then, since you told me in September.
Yeah, I think. And
so Shane Lockwood, how you doing, brother?
I recommended to Ian to buy silver as well, and that's done very well. But yeah, let me.
Guys, we have 80 people in the chat. Guys, make sure to hit that thumbs up. We will be doing the first giveaway here in about 15 minutes or maybe 5 minutes. Hit that thumbs up, guys. Make sure to smash it. It's pinned to the top of my profile, so go do all of the rules here.
There you go. So this is silver. This is gold. So yeah, bear in mind, like, where did I recommend it? September. So literally around here. So
not bad
here, but yeah, I mean,
not bad timing.
Not bad timing at all. depending on when in September, it might have been very good. But it's the same. The problem is they've been suppressing the price of gold and silver for years. In fact, JP Morgan have got done for it by the courts. And central banks in the West have also been suppressing gold, because gold is the only form of money in the world in existence. Everything that we call money isn't money. It's currency. So in 1944, at the end of World War II, everybody decided we needed a global reserve currency. And because the US only entered the war late, their economy was good. You know, Japan was off fighting China until it bombed Pearl Harbor, and Europe had been blowing itself up for ages, and they only just got over World War II. So the US had a lot of money, and they came in and essentially we decided that back then and up until 1971, the dollar could be exchanged for gold. It was backed by gold standards. And so rather than use money, gold, as the reserve currency, everyone decided let's use dollars, because the dollar was as good as gold. Literally, it could be exchanged for gold. And why would you lump around gold bars when you could lump around pieces of paper? And in 1971, Richard Nixon was spending so much money on the space program and so much money in Vietnam that the French started thinking, hang on, they might not actually have the gold to back up all that money they're spending. And so they sent a gunboat over and into New York Harbor and said, give us our gold. And they said, no. And in 1971, Richard Nixon announced on TV the temporary suspension of the convertibility of the US dollar to gold. Anyway, 50 years later, and that is the point in time that everybody will remember that the world was on its path to collapse, because we've had over 500,000 fiat currencies in existence. Every single one of them has gone to zero, but we think that ours will be fine. And the whole age of elitist corruption, government corruption, all stems back to this time. Because the good thing about gold is that anyone can get it out of the ground, and you have to expend effort and labor for it. And so people forget this. People think, why would, if you are the elites in power or the government, and you can suddenly go from needing to actually have gold to back up a currency to printing it for free and doing whatever the hell you want, giving that money to whoever you want because it doesn't even exist. Crazy. Gold is what kept the elites in check. And that is why gold has been manipulated down for so long, because if it becomes another viable alternative again, they lose their power. Debt and the debt-based monetary system, ever since they stopped using the gold backing, is what's enslaved everyone. Just nobody remembers what it was like to have a gold-backed currency.
Bro, it's insane. And I get people that DM me, they're like, Jake, what, you and Dom, it's always so bearish. But guys, when you zoom out and you understand how broken the system is, it really is, Dom. It has to be the most broken system. How can I sit here as the Fed and just say, I'm going to print trillions of imaginary dollars and give it out, and it's backed by nothing? Does that not make sense? Is that not broken?
The problem is that nobody remembers. Nobody remembers and nobody questions.
It's bullshit. It's crazy. It's actually crazy, the fact that this is the system that we have.
Well, yeah, the problem is, why would, how dumb are we to think that we literally give governments and the richest people in the world a magic money stick where they can just print it by typing a few keys, and to think that they will not abuse it? For centuries, in fact, collapse of the Roman Empire, it went from the denarius was a silver standard, backed by silver. Eventually, they moved it onto copper, collapsed the empire. Ottomans, again, same thing, gold and silver standard. Every single end of an empire begins when they debase the currency, when they take it away from being backed by something, because essentially all it means is that the people in power who can print money and tell people what is money and what is not money, that is power, authoritarian power. We tell you what you can spend. In reality, a gold-backed currency means that everyone is on an equal pegging.
Yes.
I don't have to buy the dollar. I don't have to buy the pound, because I know that that is only a form and a piece of paper that allows me to exchange for gold. So I can keep gold. I can say, no, thanks. I don't want to be part of your system. I can go off into the woods with my gold. I can spend it as I want because the currency is gold, and therefore I don't need to take part in that system. Now you are told this is your money. Can I control it? No, you can't. We control it. We print it for free, and then we take 40% of it back from you that we just printed for free.
Crazy, dude.
Do whatever. Like, people just don't remember, like, every fiat currency has gone to zero. It's a scam. It's literally like the biggest scam and the biggest Ponzi in the world, and nobody even realizes it.
Ever, right? Every fiat currency ever, like dating back to every empire. And that's like, because I went to Rome recently, right? And I realized how big and how powerful the Roman Empire was and the people there. And I promise you, I guarantee that everybody there never thought the Roman Empire would ever fail. They're probably like, we're so strong. We have the strongest military, the strongest army. And now it's gone, right? Like, gone from existence. Gone.
Well, more importantly, the people, there was no, like, nobody like got the newspapers out and said, guys, Rome's collapsed. Nobody even noticed that Rome had collapsed
Slowly,
until
right?
hundreds of years later. And then people pinpointed the moment it collapsed, and they looked back and they said this was the last emperor. But at the time, like, people kept this facade going of the Roman Empire for hundreds of years. No one even noticed. And that's what is happening right now. Richard Nixon getting rid of the gold standard, that was the collapse of the empire.
Yeah.
That's what they will look back in the history books, and they will point to that, and they will say that is when it, like, messed up. That is when everything went wrong.
And then all the other things, like the 2008 housing crash, COVID, that was a huge mistake for COVID, right? Like,
every problem,
$5 trillion out of thin air.
Literally, every problem since points back to that moment. The 2008 was from commercial banks lending mortgages out and lending debt. The debt-based system only was born after 1971. They wouldn't have been able to lend that money if they were backed by gold, because they wouldn't have the gold. But the problem with commercial banks and with, like, we only know that the Fed prints money, right? But the fractional reserve banking system means that commercial banks also can print money, because when you get a mortgage from a commercial bank, that money does not exist until they type it into a keyboard and give it to you. So it's not just the Fed. Once the Fed prints money, that's one thing. That's like the paper and the treasury notes. But every time that a bank issued debt to you, that money is created out of thin air and given to you. And then they charge you interest on the money that they just created for free. So therefore, there will never be enough. If all money in the world is created and lent because debt is money, then where does the money come from to pay the interest on the money that they just gave to you for free that cost them nothing?
You print
more. It doesn't exist. The first dollar in existence, if I say, here's the first dollar in existence, and I want a 1% interest rate. Well, where does the 1 cent come from? It comes from getting that debt. And this is why the whole world is a Ponzi scheme. Because what is a Ponzi scheme? A Ponzi scheme is a fraudulent investment scheme where they pay out the old investors with the new investors. And if you have a system where they print debt for free and then charge you interest, you can never pay off that money because the money doesn't exist. Therefore, you need to take out new debt to finance the old debt. That is a Ponzi scheme. It's the exact same thing, and people just don't understand it. I'm trying to work on this. I'm trying to work on a very, very simple explanation booklet of why the whole thing is an absolute sham, and just translate it. Because, like, honestly, like, if we do not go back to a gold standard, the whole world as we know it will get completely screwed. Like, there is no coming back from it. It's the collapse of every single empire in history. And to think, like, it's going to be so unpleasant and it's so preventable. Like, all you have to do is study history to know if it worked before, and it never does. Absolutely. It's always this time is different. And to think that we have the arrogance, and that our, like, banking system and elites have the arrogance to tell us that this time is different. Every currency ever has collapsed. It doesn't matter that we print it for free and it's not backed by anything. We tell you it's money, so spend the money. Like, it's a scam. It's never worked in history, and it's how every authoritarian dictatorship has just screwed the people. And it's the same thing happening again, just nobody understands it. And that's why they don't invest in education, because they want everybody to be dumb and just to take it. This is the way it is. It always has been this way. No one remembers the gold standard. Nobody cares. And they'll keep us dumb enough that it will seem normal, because that's the game.
Absolutely. There's a lot of good questions coming in, guys. Make sure to keep asking your questions. I have a question now for Dom. Look, I want to be optimistic, and obviously I do believe that the fiat, the traditional way that we have money and we're spending money and printing money is a scam. I want to believe that cryptocurrency can solve this. I want to believe that Bitcoin can be the digital gold. This was a tweet from Watcher Guru. They said, fun fact, only 4.5% of the entire global population are invested in cryptocurrency. I know you said last week that gold is going to be the gold standard, right? Silver, there's a lot of potential with silver. Bitcoin, you said Bitcoin could be the digital gold, but we're not there yet, right? We're not there in adoption. We're not there in terms of safety, whatever it is.
Yeah.
I think that we'll ever see a day in 5, 10, 50, 100 years where Bitcoin is that digital gold standard that we're looking for?
I mean, it's like this person, Joe Brown, has asked, if Don believes all of this, then why does he run a crypto project which is bought with fiat? And I would say, yeah, fair point. I mean, everything has to be bought with fiat. And I think it's in the words of 50 Cent, don't hate the player, hate the game. But it's true, like, as in, like, you can only do so much. Like, when you are fighting, like, back, like, I mean, I worked in finance for like 10 years. And I've like known it's like an absolute, like, you know, theft for all that time. But what can you do? All you can do is partake. Like, you can't just, if you opt out of the system, then yes, you no longer partake in it. But you also don't help it, because you're off living, like, you know, hunting deer with a bow and arrow in the woods somewhere.
You have to have it. Yeah, you have to have money. You have to have cash. You have to work. You have
to
exactly.
So all you can do is try and bring awareness to it. That's literally all you can do. I mean, you have to partake in it. Like, that's the problem. Like, and it's not the thing is, it sounds nuts when I describe to you, like, everything that I've just said. It sounds like a conspiracy, but it's not. All I've done is described the financial system. Like, no part of anything that I've said is wrong. It's all a fact. It just sounds unbelievably stupid, because it is. And that's the problem. And so, yes, I hope that eventually Bitcoin can be that digital gold.
Can it, though? You hope, but can it? Will it? Like, you're a numbers guy. Like, what's the probability right now? Like, by 2040, 2050, is there a decent chance? Do we have a fighting chance that we might see Bitcoin become the digital gold?
I mean, there's like so many factors. I mean, I'm even though I know the stuff well, I'm not good with random outcomes, because there's always so many different variables that I like to.
Of course. I mean, there could be a nuke. There could be a nuke or a solar flare. Like, of course.
Well, it's like, for example, also it's very easy to. At the moment, it can't be, because it's too easy to manipulate. For example, the reason why we don't have any spot Bitcoin ETFs and it's only derivative ETFs is that, as you know from like the GameStop and GME saga, you can borrow more futures than exist. That's what derivatives are. They're speculating assets. So you can borrow more Bitcoin than exists in the world. And that's because it's derivatives. Like, when you're trading Bitcoin on like leverage, you are borrowing more Bitcoin than exists in the world.
Yeah.
And therefore, if you don't have a spot ETF, then all that a financial institution has to do, like BlackRock or like anyone else, is to purposely suppress the price until it is no longer profitable and no longer interesting for anybody to trade it. Right now, if BlackRock wanted, they could borrow as much Bitcoin as they wanted, because obviously it's all artificial anyway. It doesn't need to exist. There's a problem with the old financial system, is that they do not play by the rules of logic or nature. That's because it's fiat currency. It's not backed by anything. So derivatives are not backed by anything either. So because there's no spot ETF for Bitcoin and it's all futures, all they have to do is short it to absolutely anything. And do you think all of the retail 4% in the world can fight against BlackRock, you know, a $10 trillion asset manager? Can we hell? Like, it's what the whole crypto market cap is like 1.2 trillion. Like,
1.18 right now.
If they wanted to destroy Bitcoin, until there is a spot futures ETF, because spot means that it has to exist, they actually buy. Like Grayscale at the moment, like it doesn't have to own all of its Bitcoin, which is why they don't publish it, because people will FUD. But this is the problem right now. Until there's a spot ETF that can't be manipulated because it has to actually own all of the Bitcoin it buys and sells, and it has to actually have that exposure, then we can't win, because they will just manipulate the price down. So we need a spot ETF for one. That's like one of the main things for there to be a new bull market and for like it to become digital gold.
Makes
a
sense.
spot ETF, and also you've got like 51% attacks. The reason why people are saying Ethereum isn't decentralized now is that the amount of nodes owned by Coinbase and like Lido, if those two organizations are served a subpoena and they abide by it, that's Ethereum gone. No longer decentralized.
Real quick, because everybody here knows who Coinbase is. Who's Lido?
Lido Finance is like they do liquid staking derivatives. So LSD is the acronym for it. And basically you stake your ETH with them. They run validators for the Ethereum network, because blockchains run on validators. More validators, more secure the network is. And therefore, whoever owns 51% of validators can take over the whole network, because they decide which blocks to process, and therefore they can stop running blocks, or they can like replace blocks, or they can start them again. So a 51% attack is where somebody is basically taking over the whole network. And the problem of having centralized entities like Coinbase and like Circle own these validators is that if the SEC serves them a subpoena and orders them to turn off their nodes and their validators, they have to do it. And if they don't do it, they're doing something illegal. So we need to trust that they will not comply. And unfortunately,
they will comply. Coinbase will comply with the SEC. I mean, well, we saw when they came at them for staking, they did say that they would fight back. So I think if they do come at them for something like this, they might fight back. But obviously, it's like if it's illegal, they won't fight back. But if they believe it's not illegal, then they've shown that they will fight back against the SEC.
Well, this is the thing. So if the it'd be very difficult for the the US government or like world governments to build up enough mining capacity for Bitcoin that they could do a 51% attack on it. And that's why everybody, and why Bitcoin maxis are such Bitcoin maxis, is because it is and remains to this day the only fully decentralized cryptocurrency, in that like the effort that it would take for them to like grab control of it is too much. And this is the problem when they went from proof of stake with Ethereum, it centralized it a lot more because it gave this problem. Because Bitcoin is still proof of work, it doesn't have that problem. However, they can still do a few things, like I said about the spot versus perpetuals, and just suppress the price so much that nobody bothers even buying it or developing in that area anymore because it's not worth it. And that's a problem where everyone only cares about number go up. Or the other thing that they can do is, try and do a 51% attack and take over the network, or clog the network. Like, did you see when they were doing these Bitcoin ordinals NFTs about how like congested the network was because everyone was, minting these NFTs now on the Bitcoin network, and it was never built for that. So therefore, it got clogged really easily. So until these problems are addressed, we're just going to suffer, unfortunately. But this is the thing, like it's just it's a waiting game. Like eventually, fingers crossed, like we solve these issues. But those are the main stumbling blocks. We haven't had it outright. We've had challenges for the crypto market, but they haven't actually like fully outlawed it, declared war, made it, even though like people always say, oh, you can't make it illegal.
Yes, they can.
Yeah, they can, and they will try and fight it. It will be very hard for them to do so, but they can make it like significantly harder than they currently do. Currently, what they're doing now is like nothing compared to if they actually wanted to proper go after it. But it's just that people will see it like how they see the Chinese doing it. They like, you know, authoritarian. So it's not that they won't try. At some point, they will try. If Bitcoin is successful in the mission it was created for, then they will try and make it illegal, because it's like, again, it's like them getting rid of the gold standard. The whole reason why they got rid of the gold standard is so they could control the people. Because if you control the money, you control the people. So if Bitcoin ever does challenge, then it will get all of these things thrown back at it by, you know, the current system. So yeah, the longer that like people can develop and, you know, boost it and get it going like as much as possible, like the better, because it just means that when push does come to shove, we can be in a better place to like fight back and to remain decentralized. So that's the problems with like Bitcoin versus Ethereum. And yeah, why gold and silver have got a 5,000 year track record. So if the world goes to shit tomorrow, even in the next 5 years, I know that by owning some silver, you know, have it in like a, like, I don't know, rent a garage somewhere so that you can go into it and store it there, like store it separate to your home, get safe, etc. But having some gold or silver, like you have something that's been a tried and tested, you know, storage of wealth for 5,000 years, from, you know, the times of like the Egyptians to like now. You know, gold is gold. It's always been valuable to every society in the world ever since existence.
Exactly, guys. And we have some really, really good questions coming in right here. I got 3 or 4 that I want to bring up to Dom, and we'll take them yes or no. And then we're going to be doing this giveaway, guys. So if you have not yet, go to my Twitter profile, already over 100 retweets. It's pinned to the top. Follow Dominic, myself, and VEMP Studios, and we'll be doing this in about 5 minutes. Dom, there's a lot of questions. And please, guys, continue to ask more questions for Dom. He's very, very knowledgeable when it comes to anything macro, meme coin, etc. But we have a few questions here. Let's go ahead and get it started with us and take like about a minute, 30 seconds to a minute to answer these, because there are a lot. Dom, tell us you want to see in the market / space to actually make you bullish. Good question.
I think I've said this on a few. By the way, it looks like Bitcoin is short squeezing its way up to my target. It's currently at 28.8.
As expected. Are we surprised?
As I said, 29.5. I see it hitting that. I can even pull up my liquidation charts. What would I see? So there's a few things that I've that I would look for, and in fact, I'm not sure if I shared it, but I definitely meant to do it, but I just didn't bother in the end. Let's see if I can find it and dig it out. Again, it's in this. I really need to make my own alpha chat, you know.
Can you do that? Can you add all of us? We got 100 people in here that would love to join your chat.
I know, but I'm gonna like
charge.
If I do it, I'm gonna gate. Well, no, I'm not gonna charge, but I'm gonna gate it to VEMP owners. So
yeah, that's smart. I would gladly. Well, I hold VEMP, but I would also pay like $20 to have alpha chat, because it's like you don't really get free alpha like this all the time. You know, I watch a lot of YouTubers, and my show's like that as well with other people. But a lot of people are just like, send it, pump, and this is like real alpha that people need to hear.
I'm trying to. For some reason, my keyboard stopped working.
Do you want me to pull up your screen or no?
Let me. Oh no, it's all right. I think I've got it. I'm trying to find.
And Joe Brown, I'll get to your question next. May you be well has a great question, and I also see Rolando Roque. A lot of good questions here that we'll bring up in just a second.
Here we are. I'm going to. Got it. So let me show that tab.
Pull this up here. Is this the liquidation chart? No.
No. This is what I need to see. I mean, yeah, you've got a few things basically which indicate that, you know, it's over. And there's a few things that you see, one of which is what we have here, which is the PMI data, which measures whether certain sectors, such as manufacturing and services, are in contraction or expansion. Below 50 means that they're in contraction. Above 50 means that they are in expansion. So you can see that every single time ever in history that the ISM manufacturing has dropped below 45, we have been in, or a recession has followed very quickly. Right now we're at 46.3. So even if it wasn't for this bit here, we would already be in guaranteed recession zone. But at some point, as you can see, it did bounce back from this part in like 94. I mean, it's still not very good. I mean, like, as you can see, like 1, 2, 3, 4, 5, 6, 7, 8.
Yeah.
9, 10, 11, 12. So 11 out of 12 times we already have done enough for a recession. But there's one time basically. 45, if we hit that, then like no recession, we got 100% track record. So that's one thing. Secondly, no bear market in history has bottomed without the S&P 500, the VIX, which is the volatility index for the S&P 500.
And real quick, no bear market in crypto history, or bear market in just general?
Stock history. So S&P again. So this is the VIX. So it doesn't go back too far because it's the futures market. So you have like the May futures and June futures, etc. No market in history has ever bottomed without the VIX spiking to above 45, and we're currently at 20. So it needs to go over 2x in terms of volatility here. So we haven't had like any fear, basically. Just everyone thinks that people are scared, but they're not. Just Twitter is really scared all the time. And I'll go into the liquidation charts whilst I'm here.
Please show the liquidation charts, because this thing is like this is a cheat code. Pretty much every single time that you pulled it up, it's been accurate.
Yeah, I mean, the monthly was the one that's like been screaming to me for ages that like a squeeze was coming.
Let's test to see if I've learned anything from our weekly streams. To me personally, looking at this chart, hold on, it's loading again.
This is a 12-hour though, so this is only. Oh wait, no, this is the monthly.
It looks like there's a lot of money, that 29.5 range, but below 26, there's a lot of money, and even in that 23 to 24, there's a lot of pressure there, huh? The most.
Yeah, so this is where I see like this. I mean, there is some here like 17, 20, but the majority of it is here at 23.4 billion worth, and this is the monthly. If you look at
it tells you how much money is there, 23.4 billion.
Yeah, of liquidation. So if we hit there, we'll liquidate like 23.4 billion of stop losses. 22.9 on like at 29.3, there's 18.9 billion. 29.4, 22.9 billion, and 295, we've got 19. So the 29.4 is like max pain area.
Yeah.
Until we get to like here, like 38. But if you look on the 3 monthly, like this one shows where we're squeezing to and where we're going after. Like as you can see, 29.6, 29.4, and then like look how much untapped liquidity there is. 3 months worth that hasn't been touched, where people have been longing and putting it below that level. So this is where we're going. 29.6. Like if you look 29.6 and then what, we drop off by like half to 29.8, then up here 40, compare that to 49 and that, like there's not enough. Once we take this part out, like this is the target. This is where this is max pain. Like if you look at this right now and you think I'm a market maker and I'm squeezing the market right now up to 29 where we are right now. So 29.2 is the highest we've been. So above that level where we're going now at 29.1, there's going to be so many stop losses, and it's going to be a cascade at that level. So this is where we're going. We're going to 29.6.
We love that.
And then in my opinion, we're going below 20 because
we hate
the
that.
amount here is insane.
We hate that. Yeah, there is. I mean, you can just see all the pressure there.
And if you look at the 6 month, same thing. Look at that. You got this super hot bit here, 90 billion almost at 29.4. And then it's just like, if you were a market maker and you had to decide what direction you could get as much liquidity and you could cause max pain to enough people, you were going here all day long, and then you're going right back down here. And they will absolutely eat. This part is like super hot. I mean, look at that, 73 billion, 77 billion, 74 billion. 67
Ooh.
billion, all next to
Oh,
each
it's
other.
popping right now. 29K, Dom.
I know it's 29.
Okay.
It will clear where we are now. So we got to 29.2 before on like the 30, on like the 29th or 30th. And then, so everyone is going to have their stop losses. If you were, trying to play the market, you would put it above the recent highs and you'd think you're safe. But the market always takes those out and it will wick up to 29.6 and it will just cascade because everyone has their stop losses above 29.2, the previous high. So from 29,250 to like 300, it will just wick straight up to like 600, 800, and then it will be back down.
I fucking love it.
And then it will probably.
I can't wait for one day when Dom is so bold. I can't wait till we hit 60K, Dom, and we're doing these streams and everybody's happy. We're celebrating. But honestly, this is like, it really is like, it's eye-opening to me. It's changed the way that I viewed money. It's changed the way that I've kept my money, right? Like instead of keeping money in my bank, I've went out, purchased gold. Like it's changed my opinion on a lot of things. I even watched, have you seen the Big Short?
Come on, you're talking to me here.
I literally watched it on my flight for the first time over here. I'm in Miami right now and I watched
it. Really?
Yeah, and it's like that just shows you how corrupt. What are they called? Like CDOs? That just shows you how corrupt the system.
Well, the thing is, they're not even like banned. They now call them unique tranche opportunities, and they're everywhere. And that's what's currently you've got. Remember, that was like a retail bubble. You know how many commercial like properties in the US currently, offices that are like no one's in them. Over 20% of the US commercial property market is vacant.
No.
Nobody's in there. So
what?
Well, why would they be? Because everyone's working from home. Because everyone's so liberal now.
Well,
and everyone's
are companies like, let's say my company, everybody's working from home. Are they still paying rent on that? Are they still, or is it?
Somebody is. And if rent isn't being paid by companies, it's being debt finance. Because remember, everyone's been in this age of 0% interest rates for over a decade. So somebody owes money on that property. Somebody owes and needs to pay back that debt. So someone's holding that bag, and you've got like huge amounts of defaults. Like there's a company called Blackstone where they've like had to gate their, I think they've had like something like 600 million in redemptions honored, but they've got like another 4 billion to clear because everyone is getting the hell out of commercial property. But yeah, we're at like 29,100 right now. I mean, luckily I'm very well hedged. I had 150 Ethereum long, which is doing well. I just got a little bit of profit taken on that. That's nice. I've got Phantom long, which I'm doing well on. And I got Solana long, which is doing well as well.
Are we bullish on Solana, Dom? I've been bullish on Solana. Are we bullish?
The only reason I have Solana right now is that I didn't want to be heavy on ETH because ETH has Shanghai on Wednesday, and I didn't trust. I still think in like this whole squeeze today, likely because everyone is shorting Ethereum and everyone is shorting Bitcoin ahead of Shanghai. So the market makers know that there's tons of like pain to cause, and they will just take all that liquidity because they just work on like it's like the channel and the path of max pain, because it's very hard to move the market organically. You have to do it with spot. But if you can push with derivatives to a certain price, you know full well, like you can see on those charts, that that's where everyone's stop losses are. And then the stop losses are forced to either sell at market or buy back at market. And when they do, it has that cascading effect where everyone shorts are forced to buy back. And that's why you have these spikes, because everyone's having cascading stop losses. Yeah. And it will work the same the way down as well. So once we've taken this out at like 29.6, we'll pull back fairly sharpish.
Dan says Bitcoin going to drop to 12K. Remember this. Dan, this is live recorded. It's not going there, Dan. I don't think so. I think Dom thinks it's probably going way fucking lower than 12K. Silver Fox said Jake's needs to get rid of those Solana background colors to get them bolt colors. I do. Or the VEMP colors. We can do that. Dom, we're almost at that hour mark. It's 1 p.m. here in Miami, and I think I have to check out of my hotel. So let's go ahead and do this giveaway. And guys, ask some questions. I'll pull up 3 or 4 more questions for Dom. Ask them while we do these giveaways. We're doing a $200 ETH giveaway. Dom, should we do 1 big one or 2 for the people? Up to you.
Let's do a big one. I'm thinking of your flight.
Let's do a big one. You're thinking of the what? The flight?
Your flight.
Oh, yeah, it's coming. Let's do 1 big one, ladies and gentlemen. right now. So let's go ahead and pull this up here. And we use the app Sortios app, so you guys know it is fair. This is the tweet. Thank you, everybody, for participating here in the tweet. Let's make sure we get the most updated copy. It looks like we have about 100 plus retweets. Very nice, guys. Thank you guys so much for doing this. Let's take this here, put it into our handy dandy app Sortios picker. A big one. Someone's going to win $200 worth of ETH. Looks like I need to connect to Twitter real quick. Hold on, let me connect. Hopefully it doesn't show my password. Let's get it, guys. Spam the comments if you guys are ready for this. Spam the comments. Spam the comments. Let's see who is going to be our winner today. Hopefully it goes with someone we want. Crypto Justice said, I am winning this. Let's do a retweet. Here's the tweet. Dom, are you ready on your end?
I am ready.
Title, let's do 310 giveaway. Okay, ladies and gentlemen, thank you so much for participating. And a really, really good show tonight. We had over 100 people in the entire stream. Good conversation, good show. I'd love to see it. Now, without further ado, let's do the giveaway. One big $200 ETH giveaway winner in 3, 2, 1. Oh, shit. It's our guy.
One of the regulars. There we go.
Oh, I'd love to see that. And you can't make that up. This is literally as good as it gets. So Silver Fox Live, congratulations, my guy. You just won $200 in Ethereum live here on Macro Mondays with Jake and Dom. You got to love to see that. You got to love to see that.
Definitely.
I think he's in the chat too. Congratulations, brother.
He was earlier.
He was earlier. There he is. Look, he literally, he just read this out. Jake needs that Solana background con and then Volt colors. And he just won $200 in ETH. So please do me a favor and send me your ETH address there. Silver Fox Lad, congratulations. It's a big one. It's a big one. Shout out to Bug Dragon. Look at him. He's in the chat right now. Cool, Ben. Well, we'll send that out over. Give me at least 24 hours because I'm flying back to California in a bit. But as always, we will get that sent over. Let's see. Dom, any closing thoughts, statements, a message for the people?
There we go. We're breaking above the highs here on Bitcoin. 29.2 we got to. It's going to squeeze a little bit higher and then it's going to wick up.
We are at 29.2. Wow. Do you think we see a 30K?
I don't think it doesn't seem like we got enough for it, but maybe we'll see how much people short. But I'll keep you updated.
Keep us updated. Let me know if you start that alpha chat. I want to join. I know people want to join. We'll spread it here. We'll build a nice little community. Roddy and I have a Telegram that we always do, and we can do it here as well. Shout out to Dan. He said, shout out to Jay. Keep doing your thing. We're going to keep doing it, guys. Having some fun. I was supposed to be back in the studio today, but Miami happens. I didn't make my flight. It was funny. Last parting note. When I checked in to my hotel today, I was like, what's up? Like the guy's like, hey, are you Jake? I'm like, yeah. He's like, oh, I watch your YouTube content. I'm like, really? He's like, yeah. I'm like, what token? He's like, Saitama. I'm like, did you make money? He's like, yeah, I made a good amount of money. So we're good here. Happy there. But that's the show. Dom, we appreciate you. Everybody in the chat, thank you guys for tuning in. We will be back next Monday with Dom on another episode of Macro Monday. And guess what? His predictions came true once again. Dom, your final message to the people.
I'd say start fading this rally when we get towards 30.
Start fading when we get to 30, and that is not financial advice. We love you guys. We'll be back next Monday. Dom, appreciate the good conversations as always. We'll see you guys soon. Peace.